Welcome to the Cryptoverse DAO. More specifically, welcome to the crypto news with the Cryptoverse DAO. I am your host, Dharma Sutra. Welcome. Yeah, let's get right into it, man. I mean, 3AC. It's a bit crazy. CoffeeZilla dropped a video on 3AC with some news sauce as well. For those of you who are not aware, hedge fund, huge hedge fund, bankruptcy. Long story short, yeah, hedge fund bankruptcy. A lot of contagion and apparently a lot of shady shit. So 3AC founders have revealed ties to the founder of Terra, Do Kwon. Terra was, like we've covered before, it was a huge crash that happened recently, and it's caused a lot. There's been a lot that's happened as a result of Terra. We've seen more moves towards regulation, which is a good thing. The UK is making a lot of moves. America and South Korea are collabing. They're dropping a they're dropping a mixtape. They're literally like working together to bring justice in the world of crypto, which is something we haven't seen for a very long time. This bear market has been very interesting, to say the least. And what the next bull run looks like will be very, very interesting as well. A bull run with regulation this time around, a bull run with a better understanding of the pitfalls of stuff. It should be interesting. But let's break down this article. So Suju, the one of the founders of 3AC, revealed that the team had close ties to Do Kwon, which made them overlook several red flags with the project that eventually led to multi-million-dollar losses for the hedge fund. So 3AC is saying they ignored Terra's red flags. They should have been paying more attention to their own red flags by the sounds of it, man. So the founders of the tainted crypto hedge fund 3AC, which filed for bankruptcy in the first week of July, have finally resurfaced after 5 weeks of no known whereabouts. In an interview with Bloomberg, the crypto hedge fund's two founders, Suju and Kyle Davis, admitted that the overconfidence born out of a multi-year bull market, where lenders saw their values swell by virtue of financing firms like AC, led to a series of bad decisions that should have been avoided. Let's take a look at that. Disgraced founders spoke extensively about the spectacular implosion of their once high-flying hedge fund. Bungled crypto speculation is what they said led to a cascade of margin calls on loans that should not have been made. So these two, both 35, became friends in high school, built it up. Watch the CoffeeZilla video because it's very, very interesting. We took a look at it in one of the live sessions prior. If you'd like to be a part of those as well, and just, get to know the team, get to know the community. If you're new to crypto and you want to learn stuff, or you just, want a community to be a part of, like, come through. We have trading education, all kinds of stuff. There's a link in the description if you're catching this on YouTube. Foisted steep losses on mom and pop owners of Bitcoin and other tokens. So they built 3AC into a behemoth before its collapse, bankrupted creditors, and they have said they've described a systemic failure, right, of risk management, in which easy flowing credit worsened the impact of wrong way bets. Interesting. A lot of widespread contagion, which we have seen across the markets. ZipMex. Was it ZipMex? I think it was called ZipMex. There was a exchange that halted withdrawals recently, and I think it was like 2 days ago, and then today they announced that they were gonna restart withdrawals, which is, pretty good, nice to see. People may call us stupid, they may call us stupid or delusional, but they're gonna, say that I absconded funds during the last period where I actually put more of my personal money back in. That's not true. Advisors in charge of liquidating the fund said in July 8 filings that Zhu and Davis hadn't cooperated with them, and the founders' whereabouts were unknown. Zhu said death threats had forced them into hiding. Very interesting. I do want to kind of break into a discussion about this stuff in just a second, but if you, what's your opinion on this? If you're on YouTube, drop a comment, let us know whether you think these guys are shady, or whether it is genuinely bungled crypto speculation and cascading margin calls that caused this whole issue. In a wide-ranging interview, the former Credit Suisse traders detailed the events leading to their fund's implosion. The whole situation is regrettable. Many people lost a lot of money. Okay, cool. So Zhu, one of the two founders, also revealed their closeness to Terra's Dokwon. He claimed that they believed the firm was going to do big things, admitting that the firm's closeness to Terra made them overlook red flags, which led to their $500 million of investment going to zero. If we could have seen that, you know, that this was now like potentially like attackable in some ways, and that it had grown too, you know, too big, too fast. Okay. The two founders claimed that Luna, now known as Luna Classic investment, surely was a setback for the firm. Still, the real issue began when BTC fell down below 20,000, and it became impossible for the firm to access additional credit. Zhu claimed that even after Luna's collapse, business was as usual, explaining, throughout that period, we continued to do business as usual, but then after that day when Bitcoin went from 30 to 20K, that was extremely painful, and that was the nail in the coffin. When inquired about their whereabouts, and why they have been in hiding, the founders blamed a series of death threats as their reason for going underground. The duo didn't reveal their current whereabouts, but they said they were moving to Dubai. The founders denied any allegations of pulling out money before 3AC went bankrupt, and also cleared the air around the $50 million yacht that was disclosed in the recently filed court case. Zhu said the boat was bought over a year ago and commissioned to be built and used in Europe, adding that the yacht has a full money trail. Okay, cool, beautiful. We'll have to see. I mean, apparently, one of the money trails was, you know, as per that CoffeeZilla video, is just literally just like a piece of paper with, hey, yeah, this is our valuation. So like, you know, we'll have to take a look at that. But this is, you know, 3AC. This is kind of like a new angle on this whole thing. The closeness to Dokwon, which made them overlook red flags. What does that mean? What do you think it means? Let us know. Let us know down in the comments below, and we'll talk about it in the live discussion segment later on as well. And this is just a little bit more coverage on it, essentially. So they've made the move. They've run off to Dubai. Not run off. They said that they're going to move to Dubai. No one knows where they are right now. They've discussed how one of the most successful funds went from being a prominent trading desk to owing creditors $2.8 billion. Regrettable is what they say, but the main points are they're denying that they pulled any money out before the collapse, right? And on the whole Terra connection, they're saying that they were close with the founder, and so they willingly ignored red flags, or they weren't, you know, as perceptive to red flags as they should have been. And the cascading margin calls, everything goes to shit. Still owes them $2.8 billion. 1,507 page court filing. Okay, beautiful. Reveal the extent of the hedge fund's debt following the implosion, with individual claims, wow, worth over $1 billion. So Genesis did a $1.2 billion claim, right?
Also owns Coindesk.com. What we reported last night, according to sources, is that Genesis, which is a big crypto lender and brokerage, is down bad given its exposure to Three Arrows Capital and Babel Finance. Now, the best we could get was in the hundreds of millions. That's obviously a big range, but according to sources spoken to by Ian Allison and Danny Nelson, Genesis, a crypto lender, is also feeling the pain that other crypto lenders in the market right now are feeling. So this is a bit unsurprising, right? We're getting some details that they do have exposure to 3AC. This was alluded to really by Michael Morrow, the CEO of Genesis, last month. But what we're seeing now is further detail around their exposure and their potential losses when it comes to making loans to the now likely insolvent Three Arrows Capital. Check that. It was earlier this month that Michael Morrow made a tweet about that. So it's interesting to see this come to light based on reporting and sources. Genesis did not comment, but it's really interesting to see that this contagion that we've seen with Three Arrows Capital is slowly trickling across all the big crypto lenders in the space as this hedge fund looked to bring on loan capital to hit a home run that would get them out of the red. And indeed, it didn't work out for them very well. So that is the story there based on reporting. Again, really interesting to see this contagion being spread among the crypto lenders, and Genesis did not dodge the bullet. I'm going to toss this to George for his thoughts on this big Genesis scoop.
Yeah, a couple things here that I had in mind. First, based on the conversations I've had with people at Genesis, I can say that most of these people are traders through and through, and sure, they did lose hundreds of millions of dollars. But expected loss is part of doing business and finance. And if you're a big dog, you're a big dog. And until I see anything to suggest otherwise, I'm going to assume Genesis is still a big dog. It's kind of how, you play the game, right? You're a trader, you're going to make a lot of money. You're going to lose some money on some trades, just how it goes. The other thing is that we're talking about all these lenders, this contagion risk, people lending money to people who are lending money to people who are lending money. It's so eerily similar to what we saw in the great financial crisis in 2007 and 2008, 2009. A lot of these big financial institutions run into trouble when they start lending a lot of money to each other. And I remember, the big cynical man I am when it comes to everything that's not Bitcoin is, okay, so what is DeFi doing? And everyone kept pointing to, oh, I can get flash loans. Oh, I can get a loan without going through a bank. Oh, I can get a loan here. I can get a loan here. It turns out everyone was getting a loan from here and then taking that loan and getting a loan from here and getting a loan from here. And that's a little sketchy. So while this stuff is unwinding, I don't really know who to get angry at or who to blame other than like ourselves, I guess. I don't know. I don't really know. I think Genesis will be fine for the time being. They're just one of the big players in the space providing loans, but they're decidedly different than the retail investors in Celsius, say, who are putting their money in there and their money's getting lent out in ways that they don't know. Genesis is a more sophisticated investor than just the four of us on here. So Jen, anything to add there?
Yeah, they are definitely more sophisticated than the four of us on there. Just the fact that you brought up Celsius. Okay, sorry, Zach. You're more sophisticated.
I got a bit distracted there. So yeah, this is let's take a look at this. Individual claims over $1 billion. So Genesis specifically, that was 1.2. The founders declined to say where they were, but one of the lawyers on call said that their ultimate destination is Dubai. This is what they say. Given that we had planned to move the business to Dubai, we have to go there soon to assess whether we move there as originally planned, or if the future holds something different for us. In the report, Zhu said that the reason for the collapse was placing leveraged trades with hope that the crypto market would rebound to the upside. He compared 3AC's implosion to that of Celsius. They froze withdrawals, filed for bankruptcy after they failed to keep enough liquidity. That was one of the first that we took a look at. One of the largest positions that went bad was Terra. And then, contagion. This is what happens. Very interesting point, like a very salient point that was brought up in the video we looked at just a second ago about lending to facilitate further lending. It's just not sustainable. It's not good. And again, this is why that regulation conversation is so important. And this is why the next bull run is going to be so key, so interesting. Because it's going to be the first one with, the regulation that has that we're seeing, because we're really in the infancy of this kind of thing, massively. Now, the next thing we want to talk about is Ethereum. The merge. Vitalik has said that after the merge, we're going to be 55% done. Ethereum is going to be like at 55% of its like journey, if that makes sense. He said there's going to be, what did he say? The merge, and then there's going to be a surge, and then a verge, followed by a purge and a splurge, which should be interesting. Should be very, very interesting. I'm very bullish on Ethereum. I love Ethereum. Anything that the team behind Ethereum does, big bullish on, because if you take a look at it, it's all furthering. It's all pioneering type stuff, which is great. It's great to see. Yesterday, ETH held on exchanges hit a 4-year low following record staking figures on Ethereum 2.0, which is the network's incoming upgrade, recently rebranded to Consensus Layer. So Ethereum held on exchanges plunges as stakers prepare for the merge. Ethereum on exchanges hit a 4-year low alongside steady inflows into the network's staking contract. Basically just getting ready to just, cut the wire here and just connect it over here type thing. It's a gross oversimplification of what it is that they're doing. But that is in effect what's happening here. So centralized exchanges tracked by analytics platform Glassnode currently hold 19.9 million ETH, a metric which was just under 20 mil in July of 2018. Moreover, Ethereum held on exchanges has plummeted by 10%. From 21.191 million over the past 5 days. These data points were also firmed up with high outflows from exchanges recently. These said outflows hit a 13-month high, according to Glassnode, indicating less interest among investors to trade or hold the asset on centralized exchanges. Chainalysis, a blockchain tracking and reporting firm, reported similar findings. The change in ETH held on exchanges experienced the largest one-day decrease. The change in ETH held on exchanges experienced the largest one-day decrease in 202 days. There we go. Decreasing by 432.84 thousand ETH to 249.58. The sharp decline in Ethereum held across exchanges is likely a result of the growing amount of Ethereum staked as the network prepares for its biggest upgrade yet. Unlike the current Ethereum network, the next one is going to be proof of stake, right? Instead of proof of work, where validators stake 32 Ethereum to verify the network's integrity. Interesting. Ethereum staked on the Beacon chain, a proof of stake version of Ethereum that launched in December 2020, has been steadily increasing over the past few days as well. The merge is expected on September 19th. This is what was announced. Could be delayed beyond that, but who knows? We'll have to wait and see. An event which will see the current mainnet merge with the proof of stake version. And today, the total amount staked currently sits at 13.14 million via a total of more than 410,000 different validators. This is it, ETH deposited to Beacon Chain and validators from January of last year up to July of now. So we're hitting like 410,000. Amid these bullish exchange flows, Ethereum has jumped 8.6% in the past 24 hours and has traded at around $1,638. The second largest cryptocurrency with a market capitalization of nearly $199 billion has rallied over 34.5% over the past week. That is the sauce. We'll just have to wait and see with Ethereum. I would say it might be a good idea if you haven't already. I mean, obviously follow Vitalik on like Twitter and like get just around, you know, the conversations that happen around these things. You can learn so much. So just do that. LinkedIn founder Reid Hoffman is turning, Dolly, this is fucking amazing. So AI art, this stuff is really, really interesting. It's AI generated art. It's so cool. You can type in something crazy like, I don't know, Donald Trump upside down in a clown suit. I don't know why my brain went to that. Hoffman is using OpenAI's AI-powered image rendering platform, that's what DALL-E is, to generate NFT artwork to auction via Magic Eden. As soon as I saw DALL-E, I was thinking like, bro, we could just, man, I should have done something. Billionaire tech entrepreneur Reid Hoffman, best known for co-founding LinkedIn, is releasing a series of Solana-based NFTs based on images he creates using OpenAI's DALL-E 2 artificial intelligence software. Do go check it out because it's so cool. It's literally the coolest thing ever. These were all drawn by a computer, man, with words, like word prompts. Hoffman announced the initiative today on Twitter, noting that he would auction the first piece starting today on Magic Eden, which is the largest Solana NFT marketplace. The project is called Untranslatable Words, and will span 11 pieces of tokenized images, originally created via DALL-E 2. Anyone can right-click save DALL-E original and make infinite copies. But, you know, this is where NFTs come in. So you tokenize them, and then it's non-fungible. It's not fungible anymore. That's a really, really good idea, and I wish I had acted on it earlier. The first piece in the collection, Mangata, is up for auction and has a current top bid of 12 SOL. Let's take a look. The Swedish term means the road-like reflection of the moon on water. Oh, it's this one. It was the image that was on the... Wow. Really cool. I could, but that would be a crime against NFTs, so I'm not gonna do that. According to the Magic Eden listing, so Hoffman wrote that he was inspired by words that exist in another language where no single word equivalent in your own language exists. He plans to split the funds generated by each piece between charitable causes as well as his team of collaborators. Any NFT that is not purchased during the auctions will be burned. An NFT is a blockchain token. Okay, cool. Yeah, I think we all know what an NFT is, but if you don't, It's basically, it removes fungibility. It's a means of removing the ability to duplicate something, as a gross oversimplification. Built on a blockchain, works on a blockchain. It's a token that can prove ownership for an item, such as artwork, collectibles, video game items. The NFT market grew dramatically in 2021. Yep, there we go. DALL-E 2 images have been widely shared across the internet since the latest iteration of the platform was announced in April. Creates various pieces of artwork full of potential, but it also calls for thoughtful policies to reduce bias and abuse. Interesting. Until yesterday, commercializing images generated by DALL-E 2 was prohibited by OpenAI because the project was still in a preview release state, but documentation for the project even specifically cites the sale of NFTs as being disallowed. But they launched a new beta version yesterday, which allows commercialization rights, and that allows Hoffman's idea to exist. He's a board member at OpenAI and has written exclusively about DALL-E on his LinkedIn page. Visual expression can't exist without technology. Great artists have always been great innovators. If groundbreaking artists like Da Vinci, Pablo Picasso, George O'Keeffe, and Frida Kahlo were alive today, I'm sure they'd be experimenting with DALL-E. Absolutely, yeah, for sure, most likely, or they might not. What do you think about this? Let us know in a comment, or we'll hop into a live discussion just in a second. But before we do that, let's talk about this. Nexo, crypto lender on prowl for ailing rivals, faces declining deposits. An analysis of crypto lender Nexo's attestations, including older data retrieved using the Wayback Machine, reveals just how much its deposits have declined in recent months. Crypto lender Nexo has positioned itself in recent months as a potential acquirer of ailing crypto firms. But data posted on the website of an accounting firm contracted by Nexo to provide regular attestations on customer balances shows that the lender may have suffered from withdrawals similar to those that led to troubles at arrivals. The firm's customer liabilities, the value of digital assets users have deposited on the platform, has declined to $3.9 billion as of Thursday, down from $6.9 billion on May 12th, based on real-time attestations provided by Armanino LLP. CoinDesk obtained data on the prior time period by accessing the Wayback Machine, neat little tool that records earlier versions of websites for posterity. Nexo is a private company, so its financial statements are not publicly available. The drop in customer liabilities works out to about a 44% decrease. During that time, BTC's price fell by about 20%, and the price of Ether was down by 22%. So market factors might account for some of the drop. The liabilities expressed in Bitcoin terms, which helps filter out the fluctuations in prices, fell to 169,672 Bitcoin from 261 and 111 Bitcoin. That's a 35% drop over the same period. Very natural behavior given the state of the market is what Vetle Lunde, a analyst at the crypto research firm Arcane Research, who conducted and published his own assessment of the Nexo data earlier in the week, says Nexo users are cautious given the shaky market conditions and the bankruptcies affiliated with other big retail-oriented crypto platforms. Steadily shrinking customer liabilities over the last 2 months. A Nexo spokesperson told CoinDesk that the outflows from the platform are proportional to the volatility in the space and are considered relatively normal for such a bumpy time in the crypto market. They are nothing Nexo hasn't seen before during previous periods of volatility like the 2020 COVID panic. This year's crash in crypto prices has rattled nerves of retail depositors while also saddling big industry players with losses on assets they had lent out in search of yields. Celsius Network and Voyager each froze withdrawals and then went on to declare bankruptcy. BlockFi, they got a lifeline from FTX, which later gained an option to acquire the firm at a steep discount. Nexo has so far avoided such drastic moves, appears to have sidestepped some of the worst debacles. Platform also managed to avoid headlines in the crash of Terra, steered clear of 3AC's implosion. As you may have read from 3AC's reveal, Nexo's name was not among those exposed, is what the Nexo spokesperson said. Nexo says it lends funds on a strictly over-collateralized basis, which is a practice that provides protection in case a borrower defaults. The Nexo spokesperson emphasized to CoinDesk that at any moment Nexo's assets under management exceed its obligations, meaning we are stable and we are able to provide clients with their funds at any time. acquisition plans. They've been vocal about looking to capitalize on the weakness of competitors. A consolidator in the crypto lending space. So the firm hired banking giant Citigroup to advise it on deals to acquire other crypto lenders. When Nexo announced an offer last month to buy assets from Celsius, the offer was formalized in a letter sent from an entity called Nexo AG in Switzerland. And at the time, executives told CoinDesk that Nexo's operations were based out of Bulgaria. According to the spokeswoman, the company is based in London. Earlier this month, Nexo signed a term sheet to acquire Evolve, which was also ailing. And Coinbase Ventures that it was backed by Peter Thiel and Coinbase Ventures, and they halted withdrawals, cut jobs, and are looking to restructure. Vault filed for protection from creditors in Singapore earlier this month. The Nexo and Vault teams are in constant contact surrounding the former's potential acquisition of Vault, says a spokesperson. Our team was aware of the filing and that it would in no way affect our ability to conduct our due diligence, and if everything checks out, proceed with an acquisition. Nexo has an expansive war chest for such deals and does not use clients' funds for such activity in any way. Fewer deposits on Nexo may have second-order effects, in this instance impacting Nexo's revenue from lending, which is what Arcane's Lunde said. The platform's utility token, Nexo, is down 80% this year, currently trading at 70 cents. So that is a spread of the news from the week. I've been your host, Dharma Sutra. This has been the Cryptoverse DAO. Thank you so much for being a part of it. Enjoy the rest of your day.